Hi everyone, welcome to today's webinar on opportunities in crisis, the role of energy taxes and stimulus in shaping India's green recovery. So I'll be the moderator for today's webinar. My name is Siddharth Goel and I work as a senior consultant in the energy program at the International Institute for Sustainable Development, or IISD. So today we'll be focusing on some international best practices on green taxation and stimulus that can help shape India's economic recovery. We'll be focusing on the experiences of the Nordic countries and have a distinguished panel of experts that will share both the Nordic as well as the Indian perspectives on fossil fuel taxation and green stimulus. Now, the Nordic countries in India have vastly different socioeconomic contexts, but they are both global leaders in creatively using fossil fuel taxes to bolster government revenues and to generate funds for their COVID-19 response packages. As the economic recovery gathers pace around the world, this panel will consider the impact of fossil fuel taxes in driving India's clean energy transition and supporting its economic priorities. Now, the Nordic experience demonstrates that taxing fossil fuels doesn't need to come at the cost of economic development and can help support the clean energy transition. Before we begin, a few words about IISD. IISD is an independent, non-profit think tank dedicated to promoting sustainable development internationally. Our energy program is an international center of excellence on energy pricing, particularly on subsidies and taxation through our Global Subsidies Initiative. We provide practical solutions to the challenge of integrating environmental and social priorities with economic development. We would like to thank our partners for supporting us in the organization of this webinar. These include the Institute for Energy Economics and Financial Analysis, or IEEFA, the Royal Norwegian Embassy in New Delhi, and the Embassy of Sweden in New Delhi. The structure of this webinar will be to have two sessions. The first will focus on green taxation. So we'll hear firstly from IISD experts on Nordic and India's use of fossil fuel taxation. Then we'll receive expert comments from our panelists before a brief Q&A session. Then we'll move on to the next panel, which will focus on green stimulus. So if attendees have any questions, please insert it into the Q&A chat box with your name, the name of your organization, as well as the panelist or speaker your question is directed to. So we'll begin with Tara Lan, a senior associate at IISD, who will be speaking on Nordic experience with environmental fiscal reform in response to economic crisis. Over to you, Tara.
Thank you, Siddharth. I'll just share my screen. So, yes, I'd like to join Sid in welcoming everyone to this webinar on behalf of IISD. I'm joining you from Melbourne, Australia, where it's about 8:30 p.m. And yeah, the purpose of my presentation today is to talk about, very briefly, provide an introduction to the Nordic experience with environmental fiscal reform in response to economic crises. Oh, I'm having trouble turning the pages of my screen. There we go. So what is environmental fiscal reform? Well, it refers to the shifting of taxes from economic functions, so classic taxes like income taxes, other labour taxes, taxes on capital and consumption, to activities that have a negative impact on the environment. So this can include the classic environmental taxes that we often think of, like carbon taxes or air pollution taxes, but also taxes and levies on transport, such as vehicle registration, and taxes on waste. So environmental fiscal reform is even broader. It refers to reform of environmentally harmful subsidies and also the socially or environmentally productive spending of the revenues from environmental taxation. So the Nordics really pioneered this model in response to a regional financial crisis back in the 90s, when Denmark, Finland, Sweden and Norway all imposed carbon taxes within a few years of each other as a way of generating revenue and shifting away from very high income taxes and towards pollution Iceland followed suit in 2010 after the global financial crisis, imposing a carbon tax. But in addition to carbon taxes, the Nordics also tax energy, transport, air pollutants, and waste. So, how does environmental fiscal reform work in the context of economic crises? Well, at the heart of the concept is the idea of taxing pollution and the polluter pays principle. Now, when you tax pollution, two main things happen. The first are some very useful price signals are sent to investors and to producers and consumers. So producers and consumers are given a message to reduce their pollution, and investors are given a message through the price signal to switch from more polluting industries and investments to less polluting investments. And of course, where you have tax, you have revenue. Now, this is really pivotal to the outcome, social, environmental, economic, the outcome of environmental fiscal reform, how these revenues are spent. They must be spent productively. One of the most productive ways they can be used is to cut labour and business taxes. Now, these taxes tend to be a drag on the economy because they reduce incentives to work and to employ. So reducing those kinds of taxes tends to increase jobs and boost productivity. And this was something, as mentioned, done by Denmark, Finland, Norway, and Sweden in the early 90s. And progressively, as they increased carbon taxes, they reduced income taxes and social security contributions. Now, it's quite common too for revenues to be used to fund green industries, and this can also boost exports, jobs, and regional development by the creation of new industries. And a good example of this is the Danish wind industry, which was supported by a suite of environmental fiscal reforms over several decades and now employs more than 35,000 direct employees and accounts for 7% of Denmark's exports. So, of course, they can be used to boost general revenues as well, which in the context of an economic crisis is very handy for social spending, debt reduction, and stimulus. So Iceland, when it imposed its carbon tax in 2010, dedicated all of its revenues to just reducing fiscal deficit. So how much revenue are we talking about? Well, all the Nordics raised between 7 and 13 billion in 2018, except for Iceland, which is a very small country. And that's 2 times the environmental tax per capita as the OECD average. Now you can see from this chart here on the right that environmental taxes are, by sort of definition, a declining source of revenue as consumers and producers shift away from shift away from pollution. They shift away from paying the taxes. So this can be countered to some extent over time by increasing the tax rate, and this maintains revenues, maintains incentive to reduce pollution, and also gives policymakers time to diversify the tax base. And you can see from this rather elegant chart that the results are fairly strong. This is the GDP for all Nordics and greenhouse gas emissions for all Nordics. There's been a decoupling of emissions from growth. And this chart actually includes all the Nordics, including Norway, which is a major oil and gas producer, which has relatively stable emissions over this time period. So when you remove Norway, you get an even stronger trend as seen in this, well, same pattern as this graph, but a stronger trend. So what are the implications for India? There is scope for further environmental fiscal reform. India is already a leader in this area, which Bala will talk about in the next presentation. But if India didn't want to impose a carbon tax because this might be too politically challenging, there are other options, such as taxes on specific air pollutants that would improve air quality and boost revenues and potentially be politically reasonably popular because of air pollution problems. But with any environmental tax reform, it's imperative that the reforms are progressive and the revenues are spent productively. Now, political economy challenges are always the main impediment. All the economists in the world can agree on what should be done, but the politics might not necessarily be supporting it. But the Nordics do have some good lessons for India, which is revenue recycling is really important in visible ways that assist the poor and boost jobs. Earmarking funds, either explicitly or implicitly for popular purposes, can also assist, and funding alternatives like low pollution technology. So the other thing, the other important approach that the Nordics used was to gradually phase in taxes while reducing exemptions. Thank you very much for listening, and I'm looking forward to the rest of the webinar.
Thank you, Tara. I think in your presentation, you covered the history of environmental taxes in Nordic countries. What were some of the drivers of it? Some of the impacts of fossil fuel taxes in addressing the fiscal deficits of different Nordic countries, as well as the implications for India in terms of the scope for further environmental fiscal reforms. Now we'll get the perspective, the Indian perspective from Balasubramaniam Viswanathan, who's an associate in IISD's India program. He'll be presenting on India's experience with the coal cess, excise, and the VAT duty on fuel taxes. Please go ahead, Bala.
Hello, everyone. Let me quickly share my slides. I suppose it's up. Yeah, cool. So hi, as it said, I am Bala. I'm an associate with IISD. I've been working with the India program for a couple of years now. And today I'll just be sharing some of the experiences that we have taxing coal, petroleum, and diesel, and coal, petroleum, and diesel specifically. So while I was making this presentation, just like yesterday, these were some of the news items that I came across while just scrolling for things that's happening. Clearly, fossil fuels, particularly petrol, diesel, and LPG, is playing quite heavily in the minds of both the public and the politicians. And as Tara pointed out in the previous sentences, while the retail prices are sort of something that is immediately on our mind, we should also take into consideration the broader environmental tax reform. And so today I'll just be highlighting a couple of the prominent examples of taxes in India. So starting off, it's the excise duty. So this is a tax levied by the central government of India. And ever since petroleum and diesel became market determined in 2010 and 14 respectively, the government has been increasing the excise duty. So the chart here shows the excise duty from 2014 till like December 2020. So as and when the international crude oil prices have dropped, the government has sort of pumped up the excise duties. And the most notable example, that you'd see around April and May last year, is when following COVID pandemic, the oil prices dropped and the excise duty were bumped up quite significantly. Currently, it's around 31.83 rupees, and that translates to about 0.44 US dollars. So apologies, most of my graphs are in INR crore, but I'll try converting it. So as a consequence of this excise duty has been that there has been an increase in revenue from it, obviously. So in the first slide, I showed one of the headlines which pointed out a 5-fold increase over 7 years. And that's pretty much what's visible here. So in financial year 2020, that is the year that ended in March 2020, around 220,000 crore was the central government revenue from the excise duty, which is around 30 billion US dollar. And following the introduction of GST, VAT is a mechanism through which states can tax petrol and diesel, and that has been quite significant at around 200,000 crores as well. And so we did a quick assessment for the 9 months during the 9 months between April and December last year, when there was an excise duty hike. Based on a sort of a back of the envelope calculation, the extra revenue raised was around 1.4 lakh crores, which is around 19.2 US dollar billion. Clearly, the revenues from excise duty is quite significant and something that we'll be discussing later in the panel. So I just want to move attention to the other sort of popular tax that gets discussed often in such discussions. It is called the coal cess, as it was introduced in 2010. It was at rupees 50 per ton, and it has been hiked a couple of times and is now at 400 rupees per ton, which is around US dollar 5.5. And the graph to the left shows the collections from the coal cess, and it is now at around 23,000 crore, which is USD 3.15 billion. So this is just what CIL reports. It is to be noted that ISD and CW did an analysis last year, and based on that, the coal cess accounts only for around 40% of the total taxes to coal. And the 400 rupees is roughly around 40% of the notified base price, the base price as CIL puts out. And this is the quality that is typically used for power generation. So, and the role of this coal cess has changed through the years, and something that I'm sure that will come up in the panel discussion that follows. So, to put all of this into sort of a bigger perspective, the share of revenues from fossil fuels has been increasing. And for the year that ended in March 2020, around 11% of the gross tax revenues collected by the center came from excise duty of petrol, and around 1% came from GST compensation cess. So yeah, so that pretty much summarizes what I was going to say. Some closing thoughts. So as the numbers showed that over the years, India has taken strong steps towards increasing taxation on coal, petroleum, and diesel. And this is a positive step because it captures the social costs associated with fossil fuels and will also generate much needed resources. And this has been particularly important following like last summer when COVID hit, and the government, both at the central and state level, wanted to pump up taxes to raise revenues. But then the challenge that comes with this is how to use it wisely, how to shield the vulnerable from the high consumer prices that happens, how to identify the such communities, how to target them. And given the context of this webinar, how to learn from the experiences in the Nordic countries, something that even Tara alluded to. And finally, how to fund a green economic recovery. I'm sure a lot of this will be discussed over the next hour and a half. So thank you, and happy to take any comments. And like these are some of the sources that I used. Thank you.
Thank you for sharing your insights, Bala. So I think you primarily covered the government's efforts to raise revenues from petroleum, diesel, through the excise duty, the coal cess, and other mechanisms. And I think you really hit the nail on the head when you said how to use these revenues wisely. I think that's an area that we'll be touching upon even during the panel discussion. So now we'll be moving on to our first speaker, first panelist, who's Ms. Guri Storas. She's a senior advisor at the Norwegian Ministry of Climate and Environment. She's focusing particularly on energy transition, short-lived climate forces, green economy, as well as bilateral cooperation with India. She has previously worked in Kenya and Southern Sudan for the Norwegian Church Aid and holds a European master degree in human rights and democratization. So Guri will be speaking today on the subject of increasing carbon taxes without damaging industry, Norway's strategies to strike a balance. Please go ahead, Guri.
Thank you. I'll try to share my screen here. Can you see it?
Yes, it's visible.
Very good. So, Indian poetry is widely known. Nordic poetry, not so much, I think. But we have this one poem that we always come back to. It's called Håvamål, or the High Tale, and it's believed to be the Viking god Odin's words of wisdom. I would like to start my presentation with one of the verses from this poem. The fool who thinks he is full of wisdom, while he sits by his fireplace at home, quickly finds, when questioned by others, that he knows nothing at all. Strange words to start a presentation on carbon tax, you might say. Well, I will come back to the reason for starting with this poem at the end of my presentation. So I am invited to talk about the Norwegian experience when it comes to carbon taxes and what strategies we have to increase the taxes without damaging the industry. I believe Norway is asked to talk about this because the government just announced a very strong increase in the carbon tax rate. I will come back to this new development, but let's start with the beginning. Let's see if I can. Yeah, so Norway in 1991, what kind of country were we? Well, first of all, we had a terrible taste in here, at least my parents did. Secondly, as Tara touched upon, our economy was in a bad shape. We had high inflation and high unemployment. And then this tax comes. So I've asked my colleagues who were as old as I am now in 1991, how was this tax received? And they said that it was actually very little controversial. It was part of a bigger what can you say, tax reform, and it was supported by both the left and the right side of the political spectrum. So what has happened since this little girl grew up and there and got her national costume as a grown-up? Well, it wasn't only this girl who grew, the economy grew a lot, 85%. And now I'm hoping that you all are thinking, well, I guess Tara already gave the explanation to this, but I'm hoping still that you all are thinking, well, then the greenhouse gas emission must have increased a lot as well since the economy goes up. And it hasn't. It's remained fairly stable. It's more or less the same now as in 1991, even though our economy is doing far much better. So there's been a decoupling of economic growth from carbon emissions. This is due to politics or policies. So since the introduction in 1991, the CO2 tax has emerged as a key element in Norway's climate policies, together with, as from 2008, the participation in the European Emission Trading System, the ETS. So currently, 80% of our emissions are taxed, subject to ETS, or both. But this won't take us to Paris, will it? I mean, having the same emissions now as we had in 1991. So Norway submitted an enhanced target under the Paris Agreement last year, and that is to reduce the emissions with at least 50% and onwards to 55% by 2030 compared to 1990 levels. So that's 10 years. We have a lot to do. And that's why the government in January announced or released a new white paper where they announced a gradual increase in the carbon tax rate from its current level of about 50 euros to a little less than 200 euros per ton CO2 equivalents in 2030. That's a lot. I'd like to talk a bit about how this was received, and there's two sectors that would be interesting to focus on. That's transportation, and that's the oil and gas industry. And due to time, I will not talk about transportation, but I'll be very happy to answer questions later about transport and Norway's electrical vehicle policies. So I'll talk about the oil and gas sector. So what you should know is that petroleum activities have contributed significantly to economic growth in Norway and to financing the Norwegian welfare state. And the sector, it participates in the European Emission Trading System. In addition, they are subject to the Norwegian CO2 tax. So the government has said that the combined cost of the national tax that only applies to Norway and the ETS payment will be capped at just below 200 euros in 2030. So how did the sector respond? This is the head of the Norwegian Oil and Gas Association. Her name is Anniken Hauglie. She said, this will be expensive, increase the cost of the Norwegian continental shelf, and could weaken Norwegian competitiveness. That's of course true. It will be very expensive. But I think the signal from the policymakers is that we would like to take the Paris Agreement seriously, and as an economy heavily dependent on the oil sector, we want to prepare our economy. And by setting a price in 2030, the government gives predictability to the industry. And I think our Prime Minister said that, well, this will happen over 10 years. They will have time to adjust. The Minister of Petroleum from the Conservative Party like the Prime Minister, said that the tax is a medicine that will give new industrial opportunities, predictability for the industry, and a more competitive industry in the future. And I guess, although I'm focusing on this kind of conflict, I'm surprised that there hasn't been more hesitation and negative remarks from the industry. It's surprisingly little controversial by the main actors, I think, in the oil and gas industry. The largest Norwegian company, Equinor, said that the CO2 tax is an important tool to lay the ground for energy transition and to reach the climate goals of the society. They do, however, want some of the revenue from the tax to be channeled back to the polluters in form of measures that will help them reduce the emissions. And I believe this is a key point. And the government is also aware of this important point. When announcing the increase, they said that they will give a corresponding reduction in taxes and duties, primarily for the groups that are affected. And they said that this has to be done in a way that will not reduce the motivation to choose climate friendly. There are different ways of doing this in the years ahead, and they haven't in the white paper announced exactly what they will do. They will do that in every budget that comes in the future. And I should also say that this white paper, it's fairly big. It has a lot of other measures as well, and it still has to go through go through the parliament.
Sorry, Guri, could you please wrap up in a minute if it's possible?
Yes, I'm going to wrap up now. So I'm going back to the poem. And the point of having this poem in the beginning is that although I hope there are points in my presentation that are relevant to the Indian context, and although we in Norway would like all countries to set a high price tag on greenhouse gas emissions, since we believe it's the most efficient way to reduce emissions, I take this poem with me. Norway and India are different countries, and I might quickly find that I know nothing at all when discussing this outside my little fireplace here up north. Thank you.
Thank you, Guri, for sharing both a poetic as well as an insightful session. I don't think we imagined that we'd get to hear such great Norwegian poetry, so it was very fascinating. And also for covering the background as well as the current recent developments of carbon taxes in Norway. And I think we'll definitely come back to the experience of both implementing a carbon tax as well as being part of the European emission trading system in the Q&A. So now moving on to the next panelist, we have Karthik Ganesha. He's a research fellow at the Council on Energy, Environment and Water, which is a not-for-profit policy research institution based in New Delhi. His research focuses on all things energy, but he's particularly interested in the future of India's power system. He's very passionate about improving air quality in Indian cities and is convinced that it is the biggest environmental threat facing Indians, both rich as well as poor. So Karthik will be talking about have fuel taxes and the coal cess supported India's transition towards clean energy sources. Please go ahead, Karthik.
Can you hear me, Siddharth? Can you hear me?
Yes, we can hear you.
Yes, and is my screen visible as well?
Yes, it's visible.
Great, thank you. Thank you, Siddharth, for the kind introduction. And as Bala said, we've been working with IISD for many years now. In fact, our interest in subsidies in some sense came up, when we started doing this work with IISD way back, I think even in 2013, when we were looking at...
Karthik, sorry, could you speak in the microphone a bit, could you put it a bit closer? Your voice is not...
Sure. I was saying that our own interest in fossil fuel subsidies sort of started in 2013. And I remember having a lot of, arguments with Bala's colleague, Vibhuti, not Vibhuti, Shruti, back then, right? Who would say that, the focus on subsidies is, of course, the main element, but we would always say, well, but India is such a high taxed environment when it comes to all of these commodities, right? Talking solely about subsidies really doesn't do much. We, of course, continue to do that publication for many years. It still focuses only on subsidies, and it's a great repository of information for what constitutes a subsidy. But I think when it comes to the tax aspect of it, Bala, right, we've probably not done as much exploration, but I think it's always been in the back of our minds that, this significant taxation on fuel consumption in India will have implications for the way we transition. And I think that's where we finally come to nearly 7 years after we've started that last piece of work. But so with that, very quickly, let me get into it. I work at CEW, it's Council on Energy, Environment and Water. We're a not-for-profit policy research institution based here in New Delhi. So very quickly, what has happened to the coal cess? I see that there were a few questions that were raised. So it has gone through many transformations in its avatars, right? So it started off as in fact, even before the NCF, I think there was a word for it, then became the NCEF, Clean Energy Fund, and then it became the National Clean Energy and Environment Fund. But ultimately, of course, it's not available now either for clean energy or environment because it became the GST compensation cess as soon as the GST was notified since the middle of 2017. And what has happened is that about 84,000 crore worth of money was collected in the NCEF up until 2018 when it stopped. And of that, only 29,000 crore was actually transferred to the NCEF at that point, right? And of this, only half was actually used in financing projects that broadly were in the remit of energy and environment. Right. Initially, what was intended to be a clean energy one that was, which a lot of entities looked up to for RE promotion, ended up going for a range of things like, supporting, for instance, 2,000 crore to the Namami Gange project, right, to a range of other different interventions, right, cleaning up of toxic sites even in the early years. But of course, there was some signature projects for RE itself. For instance, the green corridors in the interstate part, the interstate components of the green energy corridors were a lot of it was supposed to be funded by the Clean Energy Fund, but unfortunately the details aren't exactly available as to how much actually went towards it. But of the 29,000 crore, not more than 17,000 crore actually went to MNRE, right? So 84,000 crore collected, 17,000 crore possibly went to MNRE for supporting actually what was the original intended objective, but then of course has moved on right now to become the GST compensation cess. And the idea is, I think once the GST compensation cess lapses, the amount of money there will be divided between the states and the center equally, and the cess will possibly stop. Even way back in in 2016, at one of the COP sessions, which I think the Nordics actually convened with IISD, there was this discussion around India already taxing coal to the extent of 50 rupees and then 400. I think even by 2016 it had become, I think, 400. And it's a significant amount, right? So nearly 30,000 crores a year gets collected in the from coal cess, from all the coal that actually is consumed in India, both imported as well as domestic, 30,000 at current levels of consumption. This amounts to about, this 400 rupees amounts to about 30% of the run-of-mine price. For G10, I think the number that Bala showed is probably G12, and about 15% of the delivered coal price, right? All of this means that, effectively what's happening, right? In India, we're basically jacking up the price of coal-based electricity to the tune of 400 rupees per ton of coal that goes into it, right? And I'm just going to compare this to what is it that the utilities on a yearly basis lose out. It's about 60,000 crore, right? I'm not saying that all of this loss effectively, this 30,000 crore can be subsumed under it, but effectively what is happening in India, and the graph below kind of shows it, right? Which is that the solar tariff, if you look at it in India, is about, somewhere between 2.5 and 3, right? Depending on where you're looking at. I know it's gone down lower, but it seems that it will stabilize somewhere in that higher levels, given the announcement that even happened today on the MNRE BCD. You see that nearly 130 gigawatts worth of capacity in India is generating at variable costs lower than solar. And a lot of the new capacity has actually come on board after this, this coal cess has actually been created. And they're all actually much higher in terms of overall cost associated, the variable cost associated with their generation. But yet, right, it has not had any implications on the way the solar uptake has happened in India. So what I'm basically saying is that this tariff that's actually been collected from coal has really not had any implications for the growth of solar in India, right? We'll get to more details later. So in that sense, coal cess hasn't really done much for improving the parity between coal-based generation and solar generation. Because at the end of the day, when looking at it, it's, given the feed-in tariff structure that we have, and given that a lot of the capacity actually is lower than this, we know that, and at the margin, we know that solar is basically free, right? So technically, that hasn't really changed the dynamic at all. And let's look at petroleum products, right? Bala showed this slide briefly, but it's worth remembering that, this particular government that's come into power, which is about, May 2014, has only seen the good days of fossil fuel prices, right? That significant dip that you see after that black line there has basically meant that they've managed to translate all the drop in global prices to gains for the treasury in India. Right? This has been unfortunate because it's had lots of ramifications for the end consumer. One of the significant ones, of course, being petrol and diesel prices. Right. This is actually not price. This is actually the quantum of consumption that India undertakes and sort of monthly plots. Right. And what do you actually see here? If you look at that last part of this, which is basically the COVID portion, you will see that petrol is actually rebounded to levels, pre-COVID levels. Right. That dotted line that you see is last year's same time. Right. So which means that, effectively by, even by December, we're basically ahead of December 2019. By Jan, we are ahead, February, even further ahead. So what's actually happened is, and diesel, I think, has taken a bit of a hit because I think it's more intricately tied to the way the economy actually rebounds in terms of a lot of the demand for goods not yet having reached. Whereas for mobility, when it comes to activities and the alternatives not being there, just not there. So petrol is rebounded completely. So there's been little or no impact to the taxation of the demand itself, right? I've adapted Tara's slides from what she basically had to say to basically see what actually is happening in India in the case of fossil fuel taxes, right? What's actually happening in India is we tax energy, which really has no price signals, but it has an impact on the financial position of all the entities that actually consume energy, including the households, including electricity utilities, primarily because there are no alternatives that are actually created as a result of the tax that we levy on energy. And revenue, what happens to it, basically ends up financing government deficit, right? So it's a very different scenario, Tara, from what you actually presented that happens in the Nordic countries or that's happened in the past. I'm being, of course, very sort of cynical here in saying that there's been no impact. There's perhaps been some. And at the end of the day, taxation on energy has probably been necessary given that we're a net importer of a lot of the energy that we consume. But notwithstanding it, it's not really aided the transition. This is a quick sort of depiction of what's really happened. This is in the Business Standard by A.K. Bhattacharya. And I think he captured this very nicely. What he basically says is that, in the tenure of this particular government, right, the role for taxes in the GDP and gross tax revenues of fossil fuel taxes actually gone up, whereas the other components of taxes have actually come down. The number that you see there being between 9.96 and 9.90, which means, saying that overall tax revenues have sort of decreased, but fossil fuel itself has actually gone up from 0.79 to 1.1. But on the other hand, states have actually sort of really cut back. So in some sense, the center is one really that's been driving a lot of the taxation, but the states have really done a little better in terms of weaning themselves off the dependency of tax revenues itself. And last two slides here. So basically the important thing that actually came up was this, the CAG report that came up in 2020 of the finances of the government of India. What it basically said was that utilization of taxes in India was actually sort of very non-transparent and was not at all according to the way they should have been. So for instance, they find that nearly 1.25 lakh crore of cesses collected under the crude oil, right, should have actually been transferred to the Oil Industry Development Board, which none of it actually happened. And then we actually end up saying things like, we are dependent on imports, but obviously because there's been no R&D that's actually happened as a result of all the cess that you've collected. There's been short crediting of GST compensation cess to the tune of 46,000 crore. Right? And significant sums of money from the road infrastructure cess, which is actually the most important contributor to this, petrol and diesel prices, actually has not been used for purposes that they were meant for. So what I'm really trying to say here is that the main pathway for the energy transition, right, by taxation is by utilizing revenues collected to provide clean energy alternatives to consumers. In India, that has not been the case with major taxes and cesses that have been in play, right? They've been collected for basically beefing up the government's revenue position. So I'll just leave you with this final two slides, which is that if you look at the EV transition, I'm not suggesting that the EV transition is what India has to undertake. There are obviously going to be lots of pitfalls for government of India, specifically this 1.1 lakh crore worth of reduction in revenue by 2030, even if 30% of the vehicles were to actually become ICE vehicles by that time, right? But it's not all sort of, bleak for the government, because effectively what will happen is you have a lot of gains to actually get at the end of the day, right? You have newer streams to tax when it comes to economic production. You have lots more new jobs being created, and you have value add from a whole different set of sectors. And most importantly, right, we cannot value all these new sectors only for the tax money that they contribute. We have to look at the whole contribution that they will have towards the economy. The health aspect is one, and more importantly, the multiplier effect of what will people actually do when you de-link, right, the energy prices from the kinds of taxation that they end up seeing in the economy itself. So if we're able to do all this, I think the transition might make sense. But if the government continues to sort of rely on energy for taxes, I think we're in for some trouble. We'll leave it at that. Thank you so much. Apologies for the brief break in between. Thank you.
Thank you, Karthik. I think you've given us a lot of food for thought with your insights, especially covering the trajectory of the coal cess, as well as the revenues raised. And specifically looking at, for example, the inelasticity of demand of fuel taxes. So I think we'll definitely come back to it, during the Q&A. And it'll be very interesting to get Professor Kavita's views on, specifically how reforms of fossil fuel taxes can support India's economic recovery. So please go ahead, Professor Rao.
Thank you very much. It's indeed a pleasure to join you all in this webinar. It's insightful for me because while I have been giving some of these issues a little thought, this is not an area that I've worked in great length with. So let me briefly start by saying that conversations in India at this moment, for the last 3 years, but more so at this moment, on the taxation of petroleum products is how do we ensure that these products are brought within the base for GST. In the last 1 week, there has been 2 separate bits of news, one relating to a study by economists with the State Bank of India arguing that petroleum should be brought under GST and it's essential for efficient taxation in the economy, and that is one big rider that we are worrying about. That would result in lower prices in the economy, which is good for everybody. So that is one element on the agenda which is driving this whole discussion on taxation of fossil fuels by bringing them under GST with the presumption that the maximum tax on petroleum, on all petroleum products would be 28%, the peak rate for GST. So that is one element in this discussion. The second element is the state finance ministers were asked if they would be happy if these products were brought under the base for GST. And the response was that, well, find the revenues to protect our present revenue collections, give us compensation for potential revenue losses, and we are happy with moving to GST. All of this is basically a background to suggest that while all your earlier speakers have mentioned that GOI has been collecting a lot of revenues from petroleum products, and all of that has been going to fill the black hole called fiscal deficit, there is one clear group of stakeholders who would like to see lower taxes on petroleum products and a move into GST. And therefore, trying to view fossil fuel taxation as a way to do green transition or recovery with a green tone is not yet on anybody's mindset or agenda. So that's the first thing I thought we should be talking about. The second is the second is 2 components. As of 2021, the government has had, government of India, the central government has had to face, like most governments across the globe, has had to face revenue shortfall on account of shutdown in economic activities. And there was, so the revenue collections was 82% of what they budgeted for. And it is 82% only on account of the fact that they could raise substantial amount of revenues through taxation of petroleum and products, as in petrol and diesel. So Going forward, unless we assume that the economy has recovered and therefore we can get additional taxes from all other tax handles that the government has, the governments will continue to rely for basic survival and sustenance on petroleum taxes, fossil fuel taxes, to fuel the basic activities of government. So that is the other item we should be keeping in perspective, even though we would like to visualize a green recovery. This is a challenge that we have. So we'll perhaps continue to be paying wages and salaries and pensions and interest rate by using taxation of fossil fuels. So that is the second element that I think we should be keeping in mind when we are talking about all of this. So in this entire context, the third challenge that governments perhaps should be building in, looking at a 10-year or an 8-year horizon, since we are already into 2021, is the Paris Accord commitments and the reduction in pollution, because of which our ability to sustain higher and higher levels of fossil fuel consumption will be reduced. And so from a taxation perspective, it is important for governments to find other sources of revenue. Unfortunately, the Finance Commission also has come out to say that we need to be finding ways to increase the tax GDP ratio from what it is today to 19.5%. So at least a 3% percentage increase in GDP as increase in taxes. So finding ways of reducing fossil fuel taxes doesn't seem to be on the agenda, although everybody would like to see it happen. Fossil fuels cannot continue to be a large source of revenue going forward in the next 8 years. So that's the other point in the agenda. So putting these two together, I would think it's important for governments to figure out whether specific uses for petroleum taxes, earmarking of petroleum taxes, is a smarter way of trying to manage this transition, because by 2030 we will not be able to raise the amount of taxes, the share of taxes from petroleum products that we are doing today, if we successfully do a transition away from this dependence on fossil fuels. So there is a challenge that governments too need to face, which I think is not yet on the agenda because we don't have enough money to do whatever we are choosing to do for business as usual today. But going forward, I think that will come back onto the agenda. I don't think it's on anybody's agenda. The only little bits that happen to be encouraging is perhaps on the expenditure side, not so much on the taxes side. Picking off on what my earlier speakers said, the only positive part of taxation seems to be that energy demand has not really fallen in the context of higher and higher levels of taxes. And that seems to suggest that with low elasticities, you have a window of opportunity to sustain the higher levels of taxes rather than reduce them and find other instruments. So that continues to be a good source of revenue. Can we find more targeted uses for the revenues that come from it is a separate challenge altogether. So that's approximately what I had in mind, but if there are questions, we can go into it.
Thank you, Professor Rao. That was very insightful. I think you covered the inclusion of fossil fuel taxes in the GST, as well as some of the tensions involved in that. For example, the impacts on government finances. You also suggested that governments are potentially over-dependent on fossil fuel taxes. So there's a need to perhaps look at other solutions in the future. And also to look at specific ways to use these fossil fuel taxes to support the clean energy transition. Thank you for sharing those insights. So now we'll move on we'll have a brief Q&A session for this panel before we move on to the next session on green stimulus. Some of the questions I think have been answered in the chat box, but we'll take this opportunity to ask a question to both Guri as well as Tara. And specifically the question is, how has Norway integrated the carbon tax with the EU's emission trading system? And are there any benefits of adapting both carbon pricing approaches? So typically we hear of either an ETS or tax, but how exactly do those both gel? And are there any benefits of adopting both approaches? So either Tara or Guri, please go ahead. Maybe Guri can start, and then we can get Tara's view.
Yes, well, I do think there are benefits if you really want to target specific sectors. Like I said, some of our emissions are covered by both, like the oil and gas sector. It is difficult though to find the balance, because of course we don't want all Norwegian industry to fly out to other countries and have the carbon leakage. But I think, yeah, I think there are benefits, and I think also in Norway the government have some kind of compensation to the industries that are most heavily affected, and so that they will be able to get some some refunds from the government as well. It's a bit complicated, but yeah, maybe Tara wants to follow up.
Yeah, so look, I don't know how well they are integrated. I'm not familiar with that sort of level of detail, but I think it's important to note that among the Nordics, it's not a case of ETS or a carbon tax, it's both, and they have different actions in different parts of the economy. So I don't know about Norway, but I think with Sweden, industry is mostly covered by the ETS, and the carbon tax focuses mostly on domestic heating and transport fuels. So there's probably some overlap in some sectors, but they are designed to cover also different sectors and sort of complement each other that way. But it's definitely not a case of either or, it's a case of both. Maybe Matthias might like to comment on this as well, in the context of the Nordics more generally, rather than just Norway.
I think while we get Matthias's perspective, maybe we can. Matthias, are you back? I think there was some issue.
Yeah, sure. Do you want me to come in now?
Yeah, please go ahead.
I mean, just to agree with Tara. I mean, we use both systems, and as Tara was saying, they're complementary, and there might be overlaps, as Tara was saying, but definitely they are complementary. And I mean, I'll come back to that in my presentation as well. But we as Tara showed in her earlier presentation, we introduced our carbon tax already in 1991. So I mean, the system has been evolving over a number of years, and I think, you know, it's probably fair to say that not many Swedes go to bed at night worrying about the high price of their carbon tax, but rather sort of, you know, it's an integrated part in our economic system.
Thank you for sharing those insights. Very valuable. The next question is to our Indian speakers. So to Karthik, Professor Rao, as well as Bala. So would sort of a nationwide carbon tax have different implications than the current approach of taxing specific fossil fuels or coal? And would that, you know, potentially have sort of a different impact on India's economic development as well as the clean energy transition? Maybe Karthik, would you like to go first, and then we can get Professor Rao's views?
Professor Rao, perhaps first is better, please.
I'm sorry, you're not audible.
Can we have Professor Rao maybe speak on that first, and then maybe go after me?
Sure.
Okay. I'm not very sure what the difference would be in terms of how enterprises would respond if you were tagging it as a carbon tax as against a general cess on petroleum products. Perhaps the levels would be different because they'll be calibrated to the extent of emission that each of these fuels is generating. And to that extent, the taxation structure can look different from what we have today. The other aspect, I think, is I guess it's one part of the story is perhaps an awareness of whether citizens in the country can be made comfortable with the idea that certain things can and should be discouraged, which is different from trying to say, let us collect more revenue. So The positioning of saying a carbon tax in order to mitigate certain ill effects is very different from trying to say fossil fuel prices are low, so let us put cesses in order to generate more revenue. So in terms of intellectual positioning, I think the two can be very different. And so I see the merit in that. But in terms of the actual prices playing out, I'm not sure we'll see very much of a difference. That's how I would look at it.
Yeah, I think I will concur with what Professor Rao said, but just maybe the addition that I would make is maybe thinking of it as a carbon tax might make it more equitable, even though I would say even the way the taxes currently are, the rich tend to consume more, for instance, of petrol, of any of the other commodities that you're looking at, right? So in that sense, it is already having, it penalizes the rich more. But I think having it as a carbon tax, which directly taxes your carbon footprint, and if you're able to establish that for all the commodities that you consume, it is possible that we'll be maybe making things more equitable by sort of maybe pricing things which are at the other end of the spectrum more. And of course, I think what it comes down to is our ability to really then take that pot of money and make services available for the poor to actually consume. Right? I think there were some great ideas from some groups on, for instance, right, if you were to tax petrol and diesel, right, can we basically have a top-up card for everybody for free use of public transport, right? And effectively that guarantees revenues for public transport entities, right? So that effectively what you've used as petrol and diesel goes to subsidizing the transportation needs of the poor, right? Unfortunately, we, as Professor Rao has also said, that doesn't look like it's in the offing anytime soon. So as a result, putting it as a carbon tax may not change outcomes unless you have the clear earmarking for where it's going. And and as the CAG report has said, I think increasingly in the last 6 years, the number of violations on earmark funds not being used for those end purposes are more and more, right? And there just seems to be no accountability, right? In fact, this is in 1819, and the same thing actually was visible even in 1670. Right. So where exactly is this going to end, if the governments aren't able to sort of be given a rap on the knuckle and expected to behave that they should? So yeah, not sure whether the outcomes will be different to that, but yeah, I think that's the view that I would have. Thanks.
Can I just add something?
Yeah, sure, please go ahead.
Yeah. Just one little aside on every cess, every tax is fungible. So governments like to use them for whatever they would like to use them. So unless we have a political commitment on the need to do something on green front, we can all be talking till the cows come home, nothing much changes. So the first important checkbox to tick is to make sure that the government in power actually wants to do something about it. Without that, we will only be generating revenues through 20 different purposes. We'll even put them in funds, but not utilize them from funds and still finance the deficit. So unless the government signs off on an agenda for reform, the rest of it is mere conversation.
My point here, just to quickly add into what both the speakers have said, like I don't have an intricate response, but perhaps a broad carbon tax would have the biggest implication for the gas sector, notably LPG and natural gas. So if we have a sort of carbon tax on LPG, the implications on energy access, particularly with clean cooking, can warp things around, and that requires a bit more of complicated thinking, because if you have a tax on, say, LPG or natural gas, how do you sort of make sure the people continue using it for clean cooking, or have some other plan for clean cooking? So I guess that's where the sort of gap in discussion, because mostly we've been discussing petrol and diesel and coal. So there are other carbon fuels or carbon-based fuels that we are also using in India. So that's also a perspective that needs to be considered.
Thank you all for sharing those perspectives. I think in the interest of time, we'll have to move on with the next session. But if there are any specific questions, we can request panelists to just answer them directly in the chat box, if that's possible. So now moving on to our next session, which will focus on green stimulus as well as expenditure programs to promote the economic recovery. So firstly, we have a presentation from Vibhuti Garg, who's a senior energy specialist at the Institute for Energy Economics and Financial Analysis, or IEEFA. she'll be presenting on the topic of how green spending could better meet India's economic as well as environmental objectives. So Vibhuti's recent work includes promoting sustainable development through influencing policy intervention on energy pricing, subsidy reforms, and clean energy, as well as promoting private sector participation in various areas of the energy sector. She has advised a number of private and public sector clients about a range of power sector market issues, and her publications span opinion editorials, media articles, policy briefs, and peer-reviewed publications. So Vibhuti, please go ahead with your presentation.
Thanks, Siddharth, and a very good afternoon, everyone. We have kind of so far heard about green taxation and how the same can help government raise, revenue and meet economic and environmental objectives. Let's look at the expenditure side now. I just quickly share, I don't know, give me a second. Is my presentation visible? Yes. So to begin with, we have all had a very tough 2020. So, globally around the world, there were health and economic consequences on account of COVID-19. To deal with this crisis, governments across the world, responded with various interventions to either, mostly to deal with the health aspects more, but even in the energy sector, we saw a great amount of measures that were announced. And some of them were towards stimulating green recovery, but other were kind of promoting environmentally unfriendly stimulus measures, supporting fossil fuels as well. So today I will be presenting some of the analysis based on our forthcoming report, which is being undertaken by IIFA and IISD both. IISD, along with a group of other 5 organizations, have developed a tool or a website called the Energy Policy Tracker, EPT. This website showcases publicly available information on public money commitments for different energy types. They followed a bottom approach where collecting data on individual policies, but also then aggregating them to understand how different countries have kind of provided stimulus to different sectors, to different energy types, and also what is the rationale behind providing such stimulus. Using the data from the EPT, let's see how much of the fiscal stimulus was green. In the EPT, we have about 70 policies starting from January 2020 to early March 2021. And the value of these subsidies are totaling about US $120 billion. However, these policies, only 40% of the total number of policies have been able to been quantified because of the available information in the public domain. And out of the quantified measures, only 30% is being provided to clean energy, 14% to fossil fuels, while a majority of the committed value is for other energy. If you look at energy types more specifically on the right side of the graph, we see that 27% of the value committed is towards renewable energy, 13% to coal, and 2% for oil and gas. The highest share is to transmission and distribution sector with 50% share. Now, if you don't consider other energy, then share to clean energy is kind of double, but is that the true and a complete picture? So, there are, even in the other energy types here, if we distill and kind of analyze, largely the policy measures supporting the transmission and the distribution sector, which are also a part of energy, other energy, kind of disproportionately, I would say, benefit fossil fuels, despite the fact that they are not exclusively targeting fossil fuel production or consumption. For example, if you take the scheme of liquidity support to discoms to build infrastructure, modernize the grid, and also to settle payment dues to generator, this policy is more likely to benefit fossil fuels than the renewable energy generators because of the current capacity mix in the country. Further, if you look at the state level fuel policy, transport policies, and development of power projects in general, and the transmission infrastructure, which have also received some commitment from the government, are part of other energy. And if these policies kind of promotes more fossil fuels than clean technologies, it is again likely to benefit more fossil fuel sector than the clean energy sector. In addition, there are large unquantified policies where there is no publicly available information. These include policies including, such as commercial mining of coal, pushing back deadlines to install pollution control technologies. In the gas sector includes, addition of 100 more districts to the city gas distribution network, or waiver of interstate transmission charges for renewable energy. So these are big policy measures, while there is support going under each of the different fuel types, but we don't know the extent. So the direction or the split between fossil fuels versus clean energy could change in any direction, if we would have been able to quantify such measures. So the picture looks incomplete as of now. If you try and understand what is the rationale behind these policies measures, so given 2020, being a very tragic year in terms of, large population being impacted by COVID-19 crisis, I would say that in the energy sector also, there were some specific policies that were announced, and it was approximately 22% of the policy support measures which were announced primarily to deal with the COVID-19 crisis, which include policies such as, liquidity support to discom, which I just talked about. Further, it included policies like reducing natural gas prices, or extending this provision of waiver of transmission charges to RE generators, and revising, the private sector lending guideline to prioritize renewables. So these all policies measures were on account of COVID-19. While they were in response to COVID-19, there were other policy measures which were also announced that reflected kind of long-standing ambition of energy security, which also includes government's objective to promote, self-reliance in India, and also to deal with issues of unemployment. Then there were other rationales like, air pollution and climate change as well. So with the policies that we analyzed, energy security came out to be, in fact, the primary rationale for almost half of the committed value. So we have seen policies like, production linked schemes, commercial mining of coal, then extension of safeguard duty on imports of solar cells and modules. All these policies are primarily to meet government's objective of self-reliant India, and also that will boost domestic manufacturing, and in turn also create more employment opportunity. Again, I would say that this picture could change a little, because these policies, the policies which have not been quantified, could have a high impact. So while COVID-19 was a priority of the government in 2020, however, in the energy sector, government continued with its other stated objectives of domestic manufacturing, as well as to deal with climate change as well. Just to kind of, before I end, how can we make India raise its ambition of green stimulus in 2021? So this slide just talks about the key, recommendations and part of how government can further increase its allocation towards more green energy. So we have already talked about, the role of fossil fuel taxation, but I think we already discussed how that the increased revenue from such fossil fuel taxation should be used for promoting more sustainable energy choices. Apart from that, I would say that, the government should focus on strengthening green industrial policies. We have seen commitments in terms of increasing tariffs or duties on solar inverter cells and modules. So while this has dominated so far, but we need a very strong policy, like the way we have seen some states coming up, like Gujarat with its national solar policy or the state solar policies, and even Tamil Nadu's electronic hardware manufacturing policies. So one can take cues from such state-specific policies and, help at a national level to promote more expansion of or incentivizing production of solar manufacturing, as well as other modules manufacturing. And in addition, I would say increasingly, India should also adopt, including adoption of more EVs and batteries and other new technologies as well as part of its commitment towards promoting more and more green fuels. Secondly, I would say this ambition could be raised by large-scale grid RE grid integration. So we would need support to systems such as storage and other balancing mechanisms, like the new buzzword is green hydrogen. So kind of seeing how green hydrogen can play a big role in providing system flexibility as well and help in better RE grid integration. So we have seen that most of the support in the energy sector is towards transmission and distribution sector, basically to improve their performance. However, going forward, we strongly feel that while that still remains important, but we should look at future technologies. So the government should promote and focus on building more, RE grid integration technologies as well. Thirdly, the government should promote more decentralized renewable energy resources as well as energy efficiency, because clearly they are the low-hanging fruit and can help in improving DISCOM's performance. And not only that, but it will also help in creating a more reliable supply of power and also meet other social objectives of job creation and domestic manufacturing as well. And lastly, I would just end by saying that in order to achieve all the three above, finance would play a key role. So government should work at resolving policy and legacy issues and try and unlock more and more finance and attract more global capital in these green technologies through innovating mechanisms like investment trusts is another way of attracting more capital and freeing these developers and these private capital in investing in more and more new technologies as well. So I would just stop here. That's a quick snapshot of our one of the IISD and IIFA forthcoming paper. You'll see more details in that paper, but thanks for providing the opportunity to share the preliminary insights from that paper at this stage. Thank you.
Thank you, Vibhuti. Thank you for sharing a very fascinating presentation. What I found particularly interesting was the fact that you quantified the other energy and unquantified policy measures. You mentioned those and how that could tilt the balance from in terms of fossil fuels and renewables, as well as in terms of highlighting the drivers and rationale for some of the investments in fossil fuel versus clean energy. So, for example, on energy security versus climate change, as well as covering what India can do to raise its sort of ambitions for a green stimulus package. Now we'll get some of the comments from our different panelists. So we'll start out with Mr. Matthias Frumery, who's a director at the Climate Department of the Swedish Ministry of Environment. Mr. Frumery leads climate diplomacy efforts at the department. He's previously held several positions within the Ministry for Foreign Affairs, including postings in Budapest and Brussels. He has also worked as an EU advisor in the Prime Minister's office. So Matthias will be covering the topic of how will Sweden's green stimulus package promote new jobs while reducing emissions. Please go ahead, Matthias.
Thanks so much, Siddharth, and greetings from Stockholm to you all. Thanks for giving me this opportunity to share some Swedish examples in relation to today's topic on greening the recovery from the economic crisis caused by the pandemic, and also more broadly on the transition to climate neutrality. And thanks also to previous speakers So sort of for framing the points which I'd hoped to make today. Just maybe starting out by recalling what UN Secretary General Guterres encouraged us all to do already a year ago, that to ensure that recovery strategies keep us on track towards the implementation of Agenda 2030 and the goals of the Paris Agreement, and building a sustainable and inclusive economy, ensuring that the recovery is based on a green transition. And the Swedish government sees that the green transition as is a starting point for recovery efforts. And the state budget for this year includes green recovery investments amounting to about 10 billion Swedish krona, which is our greenest budget in history, in fact. And in addition to reducing emissions, the investments are also expected to create thousands of jobs. And let me say also, from a sort of a perspective of the Minister of Environment, in our discussions with our colleagues in the Ministry of Finance, sort of one of the key tenets of our discussions there is sort of how do the kind of investments we do ensure that we keep on providing jobs. So sort of job creation is really a central pillar of the work of government in ensuring the green transition as well. So let me just give you some examples of initiatives which are included in the budget for this year. We have, for example, something we call the Climate Leap, which supports climate investments throughout the country, which received extra funding and is extended up until 2026. Another initiative called the Industry Leap, which, as you can hear, supports the industry transition, also benefiting from extra funding, and is broadened to include additional technologies such as hydrogen production, mentioned already during our conversation today, and battery production. There's a new financial allocation introduced to renovate apartment buildings to increase energy efficiency, an increase of the bonus for cars with low emissions, as well as increased vehicle tax for cars with high emissions. There's new financial support for regional public transport. And let me also mention support to our Scandinavian airline carrier, SAS, amounting to 5 billion Swedish krona, where the government set climate requirements for SAS. So SAS will now reduce its carbon dioxide emissions by 25% as early as 2025, and sees opportunities to halve emissions by 2030. So those are sort of a couple of the initiatives which were presented in this year's budget. But allow me also to present some more general thoughts on measures government can take to support a green recovery. I mean, from our perspective, broad-based recovery strategies need to promote growth, employment, and competitiveness. And we believe they present us with an opportunity for structural reforms of our economies. So economic recovery measures that are not explicitly linked to the green transition should not counteract the net zero objectives set out in the Paris Agreement. So the investments we make now, they're an opportunity to reboot our economies in a more sustainable way to ensure both employment and competitiveness. And this can include ensuring institutional capacity as well as a regulatory environment which spurs innovation, employment, and competitiveness. And as I said also, to ensure that no one is left behind in the green transition, we need to have our eyes set on forward-looking transition, bringing green new jobs. And greening the recovery presents an opportunity to supporting the industrial transition towards carbon neutrality. The Swedish government set up something we call the Fossil-Free Sweden Initiative in 2015. And by now we have 22 industry-owned roadmaps towards carbon neutrality have been developed within the framework of this initiative. And I think, personally, I must say, it's just so truly encouraging to witness the engagement and the commitment of Swedish business actors in the transition to climate neutrality. And the carbon companies engage because they see the transition to climate neutrality as a way to ensure future competitiveness. Climate action is the business model of the future, and the future is now. And this is also something we see in the leadership group for industry transition, Lead It, which our prime ministers, the Swedish and the Indian prime ministers, launched at the UN Climate Action Summit in September 2019. And I'm so proud to see also that at their meeting last Friday, our prime ministers had their a summit on Friday the 5th. they invited more countries and companies to join this initiative. And you can read the joint declaration from that summit on both the Swedish and the Indian government websites to learn more about sort of the collaboration between Sweden and India, also when it comes to climate action. Let me also highlight the importance of trade here. By ensuring open trade and working together, for example, in the World Trade Organization, we can mitigate the economic fallout and set the stage for a strong, sustained, and inclusive recovery. We believe modern trade must be open, progressive, and sustainable. We should strive for rules that support global growth, underpin our climate and environment goals, and facilitate the participation of developing and least developed countries, benefit women and men equally, and contribute to the achievement of the 2030 Agenda. Trade barriers and tariffs on climate-friendly goods, services, and environmental technology should be eliminated. In this aspect, a relaunch of negotiations on environmental goods and services could contribute also to green recovery. So if I may, just a few comments on additional green recovery efforts, which can include, as had been mentioned also during our conversation today, avoiding subsidies that would rebuild or increase socioeconomic inefficient or heavily polluting activities. So we need to avoid locking in greenhouse gas emissions for decades to come. Could also include deploying economic incentives such as taxes. And as we mentioned earlier, we have a carbon tax in place since 1991. And from our perspective, the carbon tax provides incentives to reduce energy consumption, improve energy efficiency, and also increase the use of renewable energy alternatives. Maybe just to say also when relating to carbon pricing and carbon taxes, that the Swedish car maker Volvo just recently announced that they will be going all electric in 2030. And of course, that has implications also for the revenue part of carbon taxing or carbon pricing. So that's going to be an interesting discussion to follow as well when we see an increasing volume of electric cars, which thereby reducing, of course, the need for fossil fuels in transportation. Other measures could include ensuring resilience and low carbon pathways in investments in infrastructure, such as transport, IT, and cities. A great way, again, to bring about new jobs. Sustainable finance was also mentioned in order to give investors the incentive and opportunity to finance environmentally sustainable projects. And I think here again, it's encouraging to see, for example, within Swedish commercial banks and Nordic banks more generally as well, the steps they're taking to ensure alignment with Paris Agreement goals, and eventually coming to a situation where they no longer will be lending activities to or lending to activities which would be including fossil elements, and thereby phasing out their engagement in fossil industries. And again, I think we see climate neutrality as an opportunity for investments in new jobs and modernization and improved living standards based on the foundations of a more sustainable society. And obviously, limiting global temperature rise to 1.5 degrees will require unprecedented efforts by both governments and businesses throughout the world. But lack of action towards climate neutrality will bring about consequences and costs that by far exceed the transition costs. And let me also recall the efforts we've done at the level of the European Union, where our leaders agreed in July last year to set aside 750 billion euro in a recovery fund. So member states are now presenting their national recovery plans to tap into the recovery fund, and our leaders made clear that the green and digital transitions will form the basic elements of access to the fund itself. And we hope that this will also inspire other regions and countries across the world to make best use of the fiscal measures set in place to recover from the pandemic. You might have seen that the IMF estimates that government have set aside some 12,000 billion US dollars in fiscal measures so far. And this gives us a fantastic opportunity to accelerate the implementation of the Paris Agreement and the 2030 Agenda. and thereby an opportunity to come out of the crisis in a stronger shape to also fight the climate crisis. Thanks so much.
Thank you, Matthias. Thank you for sharing those wonderful insights, especially about Sweden's ambitious plans in terms of a green stimulus, as well as the use of innovative mechanisms such as conditional bailout packages for like the aviation industry, as well as interesting packages regarding the climate lead, as well as the industry lead in areas like battery production, as well as future areas of growth. Also for highlighting some of the existing collaboration between India and Sweden, and the need for areas like improved free trade, as well as a push towards climate neutrality. Now, I think we'll get India's perspective on this through Ms. Ulka Kelkar, who's a director in the climate program at the World Resources Institute in India. She's an economist with 2 decades of experience in climate change research, capacity building, and outreach. She leads WRI India's work on climate policy, which aims to support India's pathway to a climate resilient, low carbon economy through judicial national policies, carbon market mechanisms, and effective implementation in states and cities. So Ms. Kelkar will be talking about should India set itself a net zero emissions goal, and what would a just transition entail? Please go ahead.
Thanks, Siddharth. Are you able to see my screen?
Yes.
Great, thank you. So thank you so much to IISD and IIFA for setting such a provocative yet timely topic for me to speak on. I think when we reflect upon the meaningfulness of a net zero target, we have in mind a vision or a goal, something like a North Star that gives long-term policy certainty, spurs innovation, as well as behavioral change. But naturally, what is also important is what are those short-term roadmaps or milestones or policy instruments that will help us to get there from the short term to the medium term to the long term. And all this comes in the immediate aftermath of extreme hardship in the COVID pandemic, which underscored the existing inequities in our society that may get perpetuated even as India switches to cleaner fuels. So we may get a low carbon economic transition, but it may not be a just transition. So with that, I'm going to share just 2 or 3 slides. These are preliminary results, model results, just to illustrate some of the points I'll be making, and I'll be grateful for your reactions. So this is from the Energy Policy Simulator for India. It's a systems dynamics open source model that is available on the link that is provided below. And this gives one kind of scenario, which is what are the low cost mitigation opportunities that India might be able to explore. And this includes things like early retirement of coal power plants that we've been talking about. It also includes emerging opportunities like electrification plus hydrogen in industry. What you see over here is a black line, which is the reference scenario. And you can see the little dip that is the impact of the COVID crisis. You also see the current NDC target. And you see the orange line, which shows you what is the mitigation potential of the combined mitigation potential of a number of these low-cost opportunities. And on the right-hand side, you can see that some of the policies with the highest abatement potential are electrification and hydrogen in industry, early retirement of coal plants, hydrogen production using electrolysis, a carbon-free electricity standard, transportation mode shifting, and industry energy efficiency standards. So you can see from the chart that this is not a net zero scenario, but it does give some concrete opportunities. And although I'm not showing these slides, these GHG mitigation impacts will be accompanied by reductions in air pollution, so improvements in health, as well as saving of water. But what about jobs? The picture is not so simple. We know that there will be new green jobs created in certain industries. For example, we know there will be direct job creation in the short term in construction and utility as India moves on this clean energy transition. We also know that there may be losses in indirect and induced jobs. For example, due to the reduced demand for vehicles or vehicle maintenance. We also know that there will be spatial differences. We know that there will be gendered differences. And we know that there is a requirement for skilling, for reskilling, and financial support. But also there's another pathway, and that is what other speakers have been talking about, which is that as we go through this long-term energy transition, there will be significant cumulative fuel savings. So there will be net savings. But because of reduced fossil fuel tax revenues and reduced government spending, in the long term, there could be indirect and induced job losses. So let's try to think of a scenario where we introduce, what if we introduce a carbon tax policy for the industrial sector, and learning from the Nordic example, we phase it in gradually. And the idea, as many speakers have said before, is to offset the reduction in fossil fuel tax revenues. This is something that can help to augment government revenue and spending, leading to overall job losses, which is what is shown over here. This is over the long term. As you can see, the direct job increases would happen in construction or utilities or hydrogen electrolysis. And in the sort of event of a carbon tax and the sort of augmentation of government revenue, you could also induce an increase in the induced jobs, not the direct jobs. So this is one kind of pathway for sort of discussion purposes. However, I wanted to close with 3 points. First, our country is very different from the Nordic examples that we've been hearing, that we've been learning from. For example, we have a lot of cross-subsidization in our country. Freight transport in the railways cross-subsidizes passenger transport. Agriculture, industrial electricity use cross-subsidizes agricultural electricity use. So there's a lot of direct effect on cost of living. And so it becomes important when we recycle revenues, as Tara has pointed out, to do it in a way that visibly targets the poor or that funds technology. Because research has shown that how revenue is recycled depends on a number of political economy factors as well as public trust. So the form in which we recycle revenues becomes quite important in our country. The second point I wanted to close with is that we can also learn from a number of other countries, like Nigeria in the immediate post-COVID recovery has set aside funding for an MSME survival fund. For a country like ours, the informal sector is so important. A very tiny fraction of the population actually pays income taxes, and most of the workers in the informal sector lack any kind of protection or unionization. So we can learn from examples such as the MSME Survival Fund of Nigeria, which set aside 60% of its funds for women entrepreneurs. There are other mechanisms as well possible for the just transition. And the last point is really the overall message that in the aggregate numbers of the net zero conundrum, there are hidden many problems at different scales, from the utility scale to the national scale, at different time scales, from the short term to the long term, and for different social groups, women, workers, farmers. And we need to address all of these problems together. So let me just stop there, stop sharing my screen, and back to you, Siddharth. Thank you very much for your time.
Thank you, Ulka. Thank you for sharing those wonderful insights into policies that can have the highest abatement potential in India. Also for covering the potential impact of a carbon tax on the industrial sector and its impact on jobs. And also, I think you highlighted some really good points on the fact that India has these existing cross subsidies, and there are significant challenges in terms of sort of protecting vulnerable social groups. So thank you so much for sharing your insights. Now we have a brief Q&A session. I guess we can start with Matthias. We were curious, so are there any specific sectors that act as job multipliers, such as, for example, green infrastructure, that Sweden is giving particular importance in its stimulus package? And are there any lessons for India from that approach?
Thanks. I think generally to say, you know, I mean, as I mentioned briefly in my presentation as well, that from the government side, any kind of action that we would be supporting has to sort of pass through the lens of job creation. So any kind of measures which are introduced will also need to be contributing to job creation. Just let me highlight the example of green steel, for example, where we've had the government is supporting an investment in the north of Sweden, where there is a development of a hybrid, some people call the hybrid plant for green steel production, which will then be obviously contributing to new jobs in that particular region. But we've also seen a private investment emerging in the last couple of weeks, where basically you could call it sort of a green steel startup, which then will be contributing to new jobs within the green steel sector in another part of Sweden, where they expect to be having green steel production up and running already in 2025. So just sort of to highlight one specific sector, but two different projects, which both will be sort of cutting edge technology to deliver new kinds of products, which there is already, we can see sort of a demand, for example, from the automobile industry, where they see the need for this new type of green steel.
Thanks, Matthias. I don't know, do any of the other panelists want to add on to that? Either Tara or Uri? Or maybe we can move on to the next question. Okay. So I guess, Ulka, you know, it'll be great to get your perspective on what should be an area of focus when taking into account both a short, medium, or long-term recovery plan for the government. Are there specific areas that you feel like the government should focus on?
That's a very broad question. Let me just highlight one, which I think everyone is very well aware of. This is nothing new, which is the MSME sector, right? It's shocking how large a contribution the MSME sector makes to India's GDP, to India's exports and employment. And I think that is something that, that needs a lot of attention going forward. I was wondering if I could also take this opportunity to, Siddharth, to answer a couple of the questions that have come up in the chat box. Would that be all right? Just very briefly. So Karthik is asking what is induced jobs. And so it's basically like if you were to set up a new electric mobility, manufacturing plant, electric vehicle manufacturing plant, there'd be direct jobs in the factory. There'd be indirect jobs which should come out, as a result of the value chain. And then there would be induced jobs in the retail sector, for example, or in, for example, transportation. So it's as a result of that multiplier effect that you yourself were talking about. That's the answer. And Shailendra is asking about mechanisms for raising funds for just transition. And in the Indian context, I think, again, those of us, I think you're well aware that the only discussion has been around using district mineral foundation funds, the possibility of that for districts which are highly coal dependent districts. There is also some discussion in the US context about a kind of securitization of coal power plants that are being phased out. In Spain, I think they've created a just transition fund in order to compensate those whose jobs will be lost, by encouraging either providing finance to potential entrepreneurs, or as a way to restore land that has been damaged around a coal power plant. And finally, there is one way of looking at it is that as we phase out public sector jobs in the fossil fuel sectors, there would be savings on a number of benefits that such jobs imply. And so the government would actually have some savings that it could set aside or redirect, but I'm sure the amounts would not be very huge. So these are just some of the different ideas that have been discussed so far. Thanks, Siddharth.
Ulka, picking up on that, can we have, a cess like we have an education cess, and there are certain cess, to meet some other social objectives. So can we have a similar kind of a cess to meet just transition objectives as well? Do you think it's very far-fetched, or it's something
No,
one can
I'm
start
afraid
talking.
I'm just not competent to answer that question. And Guri's story about that poem is making me even less confident about speculating. I would defer to Professor Kavita Rao's wisdom on this. Yeah, I really wouldn't want to speculate. The worry, I think, in the Indian context is just this, right? That we are finally stretching a very small pool of people that are, that are in the formal sector, that are taxed. I think Professor Rao's comment earlier about GST and so on is probably more meaningful. But yeah, I'll just stop there. Thanks.
So if I may step in for a minute, I think perhaps the challenge, or one way of looking at the challenge is not necessarily to put in a cess. I would go so far as to suggest that we perhaps should be looking at, like people have been doing gender budgeting, we should perhaps be looking at an environment budget to sort of pull together all the different activities that are happening, both on taxation and on the expenditure side, on the environmental front, to be able to answer whether the government is doing some, enough, not, more, less. We are not even able to answer that question very clearly. So to position the government as doing, and therefore having a claim to raise more resources in order to do more, I think it's important to take a holistic position on what interventions the governments are doing. So I would position it like that. Otherwise, we can do many cesses, all of which, as Karthik said, will sit in some fund or the other without really being utilized for the purpose for which they were really designed. So.
Thanks. Matthias, would you like to share some more insights on this?
Thanks. Sorry to come in again and just sort of, I'm not too familiar with the Indian system, and obviously we all sort of need to find our own ways in designing the right policies and structures. But just to share an example from our perspective, again, sort of from the budget, when we design our national budget, every budget proposal has to pass sort of the lens of three perspectives. The one is climate and environment, one is gender, and one is job creation. So, when we within the government offices present our budget proposals, we all have sort of to go through that analysis to see the effects on these three sort of cross-cutting issues. And then, of course, you don't have to take all these effects into account, but we just have to be aware, at least, of the effects that a specific budget proposal would have on gender, climate and environment, and job creation. And sort of that's just sort of one way of creating the awareness of how the work, at least from the government side, would then affect society in those various issues. And maybe just another perspective on the just transition, where again, all countries have their different models, but the kind of sort of, for us, I think at least, sort of our tradition of social dialogue and engaging with labor unions, having that sort of close dialogue between business, official institutions, and the labor unions in sort of both supporting the transition whenever there is a structural reform. Obviously the climate transition affects society and the economy at large. But looking back, I guess all countries have been going through various transitions, in various sectors as well. So how can you learn from those kind of experiences and building that kind of sort of fabric within society where, again, speaking to Agenda 2030, leaving no one behind in the transition also when it comes to climate, and finding that way of creating that kind of dialogue, which then provides for people within different sectors to be on board also in terms of the climate transition, providing education, retraining, and new kinds of jobs and so forth to be able to ensure that we have sort of a successful transition. Thanks.
Thanks, Matthias. One more question that we received for the India policy experts is whether a conditional bailout package, such as that pursued by Sweden, for example, in the aviation industry, would that sort of be relevant for India, and could that help in sort of decarbonizing these sectors over time, or would that just hobble the economic recovery process? Yeah. Maybe Karthik, Professor Rao, Olka, would you like to comment?
I'm not sure. In principle, yes, of course, conditional bailouts make complete sense, but I'm actually finding it hard to find a concrete example where I would confidently apply it, right? We're just not in the same stage in terms of meeting unmet demand, right? We don't have a problem of plenty still, we have a problem of scarcity. So, but again, if you were to think, I'll just complete by saying, if you were to think of it as a more long-term policy signal, right, rather than something that has to kick in overnight, right, then that is something that that makes sense in the Indian context. Something that provides the general direction of efficiency improvements, of fuel switching, that could be introduced in certain, for example, high carbon intensive industries, for instance, or even for fuel switching for aviation or something like that. Yeah, let me just sort of leave it at that. I think Karthik, you wanted to come in?
Sorry, it was unmuted by mistake. But I mean, very quickly, I think Air India is anyway getting bailouts every year, even without asking for it, right? So I'm not sure whether in India we need anything additionally. But that said, I mean, again, as Ulka said, right, India, if you look at the number of people who already use aviation as an important mode of transport, not really anywhere significant. And currently there is no ask either from the aviation industry in India. And I think SAS is more from the international operations, Matthias, perspective, or is it domestic operations? Both.
No, it's both. Yes,
it's both. Okay, yeah. At least in the domestic context, I think the bailout doesn't really make sense as far as India is concerned, because we're again where is the money going? And that's the big question that I think we need to be asking all ourselves every time we get into these discussions is, ultimately we're talking about, as Ulka also said, a formal part of the economy that's paying taxes, but at the end of the day, sorry, I think the formal economy, and I think the one that's paying taxes, and people who are living in urban India, right? We're not really looking at solutions maybe for the rest. And I think unless we really enlarge this debate to look at where else the resource needs to go to, right, we'll probably be again, looking at sort of self-serving solutions, and maybe aviation is not the right starting point for us. I think it was a beautiful solution in France, right? For instance, who started it first, right? They said that, so long as they were not undercutting the trains, they would sort of get some sort of like a bailout, right? But in India, that's not really the case.
Thanks, Karthik. Professor Rao, would you have any views on this?
I don't really have very much to add on the subject. I believe that there is a need for the broader conversation on just transitions, and therefore finding ways for not just individuals but businesses to be able to make a transition. But India is so far from being just today in terms of employment opportunities and everything else that I'm not sure it's very easy to put just transition on very high on the agenda for the economy as a whole. The limited perspective of just that a government is going to understand today is to ensure that they will have the revenues tomorrow that they have today, or the growth in revenues. So I think my view of how perceptions are going to evolve is to first safeguard the sources that are going to contribute to government revenues going forward. And thereafter we come to this, we have been talking about demographic dividend without really being able to harness, right? So we have a challenge in trying to employ everybody to ensure like our economy is just today. And I think that comes first before we can talk about all of these other things. So I think that's all I want to say.
Thank you for sharing those insights. In the interest of time, I think we won't be able to take more questions. So thank you everyone for joining us today in this fascinating webinar. We've covered quite a bit of sort of subject matter over the course of sort of 1.5, close to 2 hours now. And we hope that it was an insightful session for everybody. It promoted sort of cross-learning between both the Nordic countries as well as India. And the presentations, we request the speakers, if it's possible, to share the presentations, which will then be viewed by the public. So thank you all for joining us today. And thank you again also to our three partners, IEEFA, the Royal Norwegian Embassy in New Delhi, as well as the Embassy of Sweden in New Delhi. Thanks everyone. Have a great day. Bye.
Thank you, Sid.
Thanks. Bye-bye.
Bye.
Thank you. Bye.